Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 11th of April. So I've seen one of the most tumultuous weeks in recent history this week with, I guess, the tariff war, we can call it, really exploding all of the markets. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that, clearly we've had a massive break of this level here at the 62 cent mark. We knew that it was very strong support, and it has been for quite some time. But what we also knew was, if we saw a break of that level, it was going to go down. Look, no one would have expected that it was going to get back into the 50s. No one's going to be calling that. But the 62 cent mark was very, very strong for a very long time. I think the key is now with all of the talk around the tariffs, we need to be very, very mindful that we need to probably capture the market of where it was. The best way to trade it is to capture a picture of where it was prior to the crazy week, and I guess a little bit more of a consolidation. Even though we are seeing a little bit more stability now, we're back up above that 62 cent mark, and I think that's really important in terms of trying to get some sort of clarity as to where it could go now. We know that this is a very strong level, and if we basically forget this week, just erase this week. Let's assume there was no Liberation Day, and really the market's back exactly where it was prior to Liberation Day, and we're going to look at that as a support level again. And we're only going to do that if it stays above it, of course. While it's trading above the 62 cent mark, I would be looking for long opportunities and stay within this channel still. I think the channel is still relatively solid. The moving averages obviously had a little bit of distortion because of the crazy week, but realistically, if we can maintain our level above 62 cents, then I'm comfortable to trade either to the middle of the channel or to the top, depending on which way it's trending. If, however, it starts to struggle to get past the 62 and it starts to roll over from this point onwards, we're going to look at that support level as a resistance. And it's going to be a roll reversal zone. So as it stands, it's trying to actually close underneath it. You can see this candle here is trying to pull underneath it. If this is where we're starting on Monday and we're trading under 62 cents on Monday, I'd be starting to look for lower lows and lower highs and following a short pattern down to around that sort of 60 cent mark to 59.50 again. Now that it's sort of been there, the market knows it can go there, and that is a little bit of a problem. So just be mindful of that now that it's got a precedent, and you've got to be a little bit careful. But if it gets above 62 cents again, I'd be starting to be comfortable with that channel. But if it does roll over here and it can't get past it, that's going to be basically a resistance level that was just as strong on the way up. So it's a relatively strong resistance actually. And if it does roll over, I'd be starting to look for those moves back down around that 200 pips from here. So not bad trading if it does it either. So very, very interesting week. The US dollar CAD, of course, look, everything we're going to see today is going to be a little bit crazy. But I think what you've got to remember again is that prior to Liberation Day, we were in a downtrend on the CAD. Okay, so you could see that it was already making lower highs and lower lows before. At the start of April, we knew that we were already doing that. The target, though, however, was the 141, and that's already been hit. The secondary target of 139, well, it's really 139.50. I think it all but hit it. It got very close anyway, or it might have just touched it. But that's not one that I would have traded, because I think the real landing zone was the 141. Okay, when you're getting down to these sorts of levels here, it is another level again. But we are talking about lower high, lower low sequences. So if we see a continued weakness and we see a series of lower highs and lower lows on a smaller time frame, I would be looking at that 139 sort of 30 area. The high that we've got here and the high here that was support at this point here, that's going to be the important zone. Okay, now I know it's kind of almost touched it already, but it is effectively 100 pips above it right now. So the fact that we've got a little bit of room to move from it is a good thing. If we start to see lower high and lower low sequences, start aiming for that 139.30 as your target, and I think that was not a bad play. In order for this to go long, it needs to be trading again above 141. If we are daily closing above 141, then I would look for long opportunities up to the moving average, probably at most. I'd only be keeping the trades relatively short and sharp in this environment. But it needs to close above 141 to get my attention for a long. Other than that, I'd be looking for shorting opportunities on the way down on this one. All right, US dollar yen, and again, one of those ones where it broke a very key level of support, obviously. But we do need to be very mindful that we were in a downtrend. We know this. We've got lower high, lower lows everywhere. This was just a pullback to a very strong resistance zone, and it was already selling off prior to any I guess induced movement. So realistically, this is a level where that 144 sort of 50 area, you can see we've got a lot of support and consolidation here. I'm gonna pop a line there. Actually, it's at 144 exactly. I'll pop a line there, and I'll tell you what I mean. This is the level that, and it's already touched it. I mean, it's touched it twice in the last 2 days, so also be mindful of that. But there was a lot of action here. It completely reversed there. It bounced off it again there. Even though it was in a downtrend, this is where it found support. And then when it did come up, a breakthrough and came up again, it found support again on the way up from that level. So it's an important level, no doubt. And it's already touched it twice. But if we get a daily close below the 144, I'm going to look at the 142 as the next very real target, because we've got a big spike lift off from there. And we've also got what has reversed a big trend here again as well. Like, we obviously started a very big trend up from this point onward. So look, I'll pop this line in just so you know exactly what we're talking about. It's around that 141.80. That's the level that if we get a break below 144, I'd start to target the 141.80 as the next move down, because we know we've got that previous proof. If we get a rollover here and we start to see a series of higher highs and higher lows on a smaller time frame, in the first instance, I'd be looking for the 146.50 move. That would be my target on that one. You want to, again, make sure that the trades are relatively short and sharp. It's in this very, very volatile environment. You want to be in and out as efficiently as possible. So that would be the target, and I think we'd keep it at that. So two really good targets. I think whichever way the momentum shifts is the way I would trade that one. All right, over to the dollar index. And once again, we were in a downtrend. Obviously, it continued on. This has proven to be a really, really good sell-off zone from there. It hit a level of, look, 170 is the target that I got to. 150 is the very, very heavy support that we can see right through here, okay? It ducked below it only for a couple of candles, but that's what basically reversed the downtrend last time and started, one of the bigger moves we've seen on the dollar index in quite some time. So we know that it's a very, very serious level, and it obviously gravitated towards it now and has pulled back a little bit, but this is more than likely where the stopping zone will be, if there is going to be a stopping zone. So I think this is the part where if we see a series of lower highs and lower lows, there's 50 points or so that we can probably get on this level. But just be mindful that if there's going to be a turnaround, this is probably going to be the turnaround zone, because this is very, very heavy support, and it's a round number. It's a psychological level. There's many reasons why this is actually a really good level. So the euro is obviously the one we want to trade, but if we do go long and we're looking for long opportunities, I wouldn't be looking past the 103 area here, where the next resistance will be. And that seems like a long way away from where it is now, but I mean, the euro will be the one that tells the story. So we'll go to it now, and you can see obviously it's done everything it's promised it needed to do, all the way up to the previous highs again, like we talked about last week. Even though we couldn't have known it was going to be so explosive, of course, it still went in the trend. And remember, that's the thing, these levels hold up a lot of the time when there is uncertainty in the market, okay? So really not a lot to say about the euro. It hit the target, hit the recent high here at around that 111 to 112 area, selling off just slightly, but I would expect that we're probably going to find resistance, just like the dollar index is not very far away from very, very heavy support. I think this is not far away from very heavy resistance, as you would expect. And I'd be looking for shorting opportunities more than longing opportunities on this one. And they're all down to around that 109. And also probably now this has been established as a zone. So 110 would also be a bit of a target for the euro short. Again, 20 moving average or 110 would be the targets I'd be looking for if we get a series of lower highs and lower lows. But we must see a series of lower highs and lower lows before we do that, because this has been a very, very powerful move. I wouldn't be looking for any long opportunities until it breaks through and test it from above. That's what it does. Needs to do to convince me of that. And the S&P 500, look, this has been the craziest of them all, of course. 10% swings in a day. There's not much you can say about this, so we're not going to spend a lot of time on it. It hit a ridiculous level down at 4,800. It's almost impossible to trade. If it was going to bounce off from this level, this was the level it would have, because we know that there's pretty strong support there. But again, it's very, very difficult to trade. It hit the 20 moving average and then sold off again. It's starting to rally a little bit towards the end of the session today. There's a little bit more to go before the session closes. But in reality, this is just one of those ones where you really need to watch and let it play out. Probably the one that you wouldn't want to trade right now is the S&P 500. Until the volatility comes down to something more reasonable, I would be leaving this one right alone. This is the toughest one to trade. It's still, we were always in a downtrend, so we've got to remember that. We know we were in a downtrend well before Liberation Day. Couldn't have anticipated such a big move, but I would be letting it consolidate around this zone. I think that if we find a bit of support at this level here, I'd be looking for long opportunities up to the 55 and 55.50 and the 20 moving average. Worst case, if it starts to sell off again, I'd be looking for the lows that have already been created. But again, I would be treating this one with a lot of caution. Okay, be really, really careful if you are trading the S&P 500 until it settles down a little bit. So I hope that you've been able to survive and navigate your way through one of the most volatile weeks you're ever likely to see this week. Hopefully you came through unscathed, but just again, trade carefully, keep your stop losses in tune. And if you're not confident, just watch and see and let the volatility eke out of the market a little bit. The currencies are a little bit more steady now and they're starting to steady up. So they're the ones I would probably more than likely trade if you really needed to, rather than the S&P. Just leave the S&P alone for a few days and let the volatility get out of it so it can give us some more clarity. And we'll see what it gives us next week. Thanks very much for joining us, everybody, and I hope you have a fantastic weekend.